Hello, everybody. I'm your host, Eric Bird, here at StopStrugglingNow.com. And today we're going to talk about the stock market. I received dividend notifications. That's right, making money while I sleep, while I party, while I do whatever the hell I want to do. You want to do that too, don't you? So we're going to go over that, and we're going to go over a little economic conditions as well. Educational day and money-making day, and it's still not too late. Let's talk about it, and welcome to Foci Optics. Check. Stop struggling now gear. Check. And something has come to my attention. Out of the 6,000 plus subscribers, only 1,100 people receive notifications. That means over 5,000 subscribers are not receiving notifications when I upload videos. Come on. Again, there's always something going on with algorithms. Please like, subscribe, and click the bell below so you get the latest updates. Now, let's get to it. All right, welcome back. Well, as you can see, we're all here at this YouTube channel, Stop Struggling Now. And again, I'd appreciate if you share the video, if you like the videos. And we have a join button over here on the right. If you would like to support the channel, please hit the join button. Members get special messages and videos. All right, let's get into this. The reason why I'm doing the video was because, like I mentioned, in the last 2 to 3 weeks, I've gotten notifications of dividends. So I wanted everybody to think this is money that you've already put out. So any extra money that you have, you could buy some of these that I'm showing you. I got notifications, and I'm about to show you, because most people think you have to spend, share prices might be 100, 200, 300 or more because of Amazon and Tesla's in the news, and Apple's always seemingly in the news lately. But in reality, there's other ways. But I'm gonna always give a little educational situation first. This is from CNBC. Of course, I'll have a link down below to this page, but you can see here in June, this is what they were saying. June 19th, the stock market is running out of steam, with reopening trades fading and economic data uneven. So if you would have read this headline a month and a half ago, you would be thinking it's over. You wouldn't think that Apple's going to have their all-time high. You're not thinking Amazon's reaching their all-time highs and Tesla's reaching their all-time highs. And you wouldn't think that the NASDAQ would reach its all-time high. It's kind of funny when people start talking like this. I say, might want to be a contrarian sometime, because they're saying things for a reason. I'm saying things for a whole different reason. And let's put it in perspective. When our Federal Reserve and our Treasury and all those guys are literally 1%ers, and you're talking about stimulus money, and you're talking about places are shut down, where do you think millions of dollars are going to trickle up to? Just what we've seen in the past. So when this next stimulus bill comes out, don't be surprised if companies get hundreds of millions of dollars. It might be 10 million, 5 million, 3 million increments. But what this allows them to do is still buy more shares of their own stocks, or make some other maneuvers. Because remember, 90% of the stock market, 88% of the stock market is owned by the top 10%. If you guys have missed a video I did on the stock market a few weeks ago, that was the latest data that I had. So from 2018, when it was the top 10% owned 84%. Well, now the top 10% owns 90. And when corporations can get hundreds of millions, billions of dollars, and they can dump it into buying, and the one percenters themselves already make a lot of money, when the prices go up, they get to take advantage of this. So you have to keep in mind this is what's going on. And with that said, you have inflationary situation. So now you have to consider precious metals, gold, silver, platinum, palladium. But most of you know last month gold and silver prices went up dramatically, in fact. So here's a chart right here with the gold, and you can see it dipped in March when everything else dipped. And again, everybody was thinking the sky is falling. This is also known as blood in the streets. They're selling, and you could have picked up grams, ounces, tenth of an ounce, whatever you want to do. You could have picked it up, and now it's up to almost near 2,000. These are the kind of things that happens when the sky is falling. And ladies and gentlemen, the sky's gonna be falling eventually. So do you have the cojones to sit there and buy when it's down there and it's dropping? Those of you who did so in March, then you are well ahead of the curve right now, and you're happily earning 10, 15, 20, 30, even in some cases over 100% on your money since the March lows. When we were talking about get in while you can at that time, and if you did, you're way up in your stock market portfolio. Now, I'm going to go over the stock market portfolio, but again, I have to get on to some things that matter. Tesla is being talked about being added to the Standard & Poor 500. They had to have like a year of profit in order to be added to the Standard & Poor. I also wanted to bring to your attention the fact that Standard & Poor, NASDAQ, Dow Jones, Russell, these always add and subtract companies. So when somebody says that they go up in price, there's a reason. This is why a lot of people invest in index funds, because they are getting roughly 8% on their money, 9% on their money. So you can see here with Tesla being added, that causes a problem when you are, let's just say your valuation is 277 billion. Meanwhile, you have other companies who might be only valued at 1 billion or 2 billion. That kind of upsets the balance of the index. But in order to keep these indexes moving up, they pad it. So this is why GE is no longer on the Dow after it's been there for 100 years, because they were having financial problems that they went down. So they changed out and put somebody else on there so it would make it appear that the stock market keeps going up. These sneaky tricks the one percenters have, because they're investing in their own casino. So either way, you can't lose. Here are some of the index funds. Okay, we're going to get to the dividends coming up. Here's the Vanguard, which is VOO. All right, people ask me what are the index funds. That's the Standard & Poor 500. And if you have Robinhood or Webull, and if you don't have Robinhood and Webull, please go down below and click on the link so you can get your free share of stock. And not only that, then you share your link as an affiliate, family, friends, and whoever else, and have them sign up to get their free share of stock, and then you will also get a free share of stock. So why not? Be an affiliate. Aren't you in the making money business, CEO of your life? Come on. Let's go. All right. VTI is another Vanguard index fund. And generally, they do like I say, 8%. Let's see, in the last, I put 5 years on here. 5 years, they've done 53%. So that's 10% a year, actually. So that's pretty good, considering the circumstance. And let's go with the VOO. They're at 57. So that's better than 10% in 5 years. And again, this is long-term investing, ladies and gentlemen. You have to keep your funds locked up. And in certain cases, some of these funds may give you a dividend yield of 1 or 2%. That's about it. But hey, it's money while the price is going up at 10% per year. So you can start doing the math, because once you go past 5 years, how much do you have? And they're talking about you put in 200 and it's 300. So now another 5 years, 300 might be 450 if they keep this rate up. Who knows? Again, past results doesn't guarantee future results being the same. But that's the safeguard. And now that you know what the Standard & Poor's, the Dow, and all these guys and the NASDAQ do, they kind of put in the best companies based on how much they're making and how well they're doing, and they put them in the index. And what's going to happen when Tesla gets put in the index? Then you're going to have these type of ETFs, Vanguards, it could be Schwab, it could be anybody else. They're going to invest because they're an index fund. So now money's going to be swamping in to the index fund. So you have an automatic appreciation in price. It might be short term, it could be long term, but either way, there's going to be an influx of money, that's for sure. Now let's get on to the stock dividends that I received notification over the last 3 weeks that I'm going to be getting dispersed dividends, and I figured I might as well just give you the companies, because some of you still may be sleeping and not understand that it doesn't take that much. Even if you don't have that much money and you make a commitment and you go, hey, you know what, I'm going to do $50 a month, I'm going to do $100 a month, $25 a month. It doesn't matter. You want the money that you have on you to make money for you. And here you can see Analy Capital, NLY. You can see right now it's $7.41. At this particular price point, because if you would have bought it a few months back, it was only $4 or $4.50, something like that. You can see one of the videos made in at the end of March where I'm talking about NLY. And I don't know the number at the time. I won't look it up because that'll be too long. But here we go. You can see 12% on your money right now. This is $22. They pay quarterly, which means every 3 months. So that means roughly in 3 months from now, well, 3 months from this payout date, so 10/31 roughly, or sometime in October, there'll be another 22 cents per share payout, and that's 12% on your money. All right. Yes, capital management, they do real estate and things like that. But again, they're basically a company that invests in real estate, and they are part of the 1%ers. So some of that hundreds and millions of dollars they're getting. They're also getting probably forbearances and all kind of other side deals. So they're still able right now to issue a dividend. So I'm happy. Thank you. And notice the price. Good. Another Gladstone Commercial Corporation. Once again, these guys invest real estate, and they have different ways of monetizing it. This is a monthly dividend, and as you can see, 12.5 cents per quarter per share that you own, and that at the $18.20 price, that's $7.47% dividend yield, as long as they're kicking it out. So then, and apparently they already kicked me out. So since it's monthly, they're saying next one is September 30th. So again, I don't know when. All I'm going by is the last 2 to 3 weeks. So I just got notifications, so that means I got a payout or it's coming up. So it must have been a payout around now, I guess. All right, but anyhow, they're saying they are doing monthly. So I don't see monthly here, but that's okay. I got notification. There's dividend coming. So whether it's 7% a year or whether it could drop down to 5% a year, my money's working for me. I don't have to put more money in. And Gladstone, just for the podcast subscribers, is G as in George, O-O-D as in David. Next up, Jamera Investment Corporation, C-I-M as in Mary, once again quarterly. their payout 13%, as you can see on the screen here from Seeking Alpha, and as you can see, it's 30 cents every 3 months, which is $1.20 per share, $8.99. Again, all highly affordable. And as some people might say, a cup of Starbucks coffee. Starbucks coffee or earning money every 3 months. Wow, what a choice. IVR has not been doing very well. They had to cut their dividends. And before they had to cut their dividends, because again, you can see that big old mortgage capital there, I, V as in Victor, R as in Robert, $3.07, and they're only giving 2 cents per quarter. They used to give roughly 46 cents or something thereabouts per quarter, or 45. So I don't even think it's that much. It was 30. I can't remember. But anyhow, they reduced it now down to 8 cents, which now means you're only earning like 2% on your money. And quite naturally, you would expect something like this, and this is why the stock price has been hammered. And they don't want to really issue dividends because of the uncertainty. All this is understandable. At this point, it's a high-risk maneuver if you wanted to get into IVR, because the upside is humongous. If they were able to get back to a stable economy, then it would be $1.50% on your money, doggone it. So hopefully we can get past this pandemic situation and get on with life, and somebody that wants to control the situation, hopefully that'll happen. Now let's move on. Prospect Capital, same thing. You've heard me talk about them before. They're into the real estate biz as well. They pay a monthly dividend. P as in Paul, S as in Sam, E, C. Of course, I get notification every month from these guys. And right now, even at the $5 price, that's 14% on your money. I'm hoping you understand what this means. For all those people that don't know, Warren Buffett, for instance, he has dividends of $1 billion a year. That can buy a lot of companies. And it isn't just $1 billion either. It's multi-billions. I believe it's more like 30 billion. So when you have that type of money coming in, I think they can buy companies. You know, when he's saying, hey, I'm going to buy this company for $1 billion, he's using money that he already put in, or other people's money, using that money to create these dividends, and he's using the dividend money to buy other businesses. And he's getting his stock from those other businesses as well, because he always buys publicly traded companies usually. All right, 14% on your money, ladies and gentlemen, and a monthly dividend check, and it's $5. Again, anything that has to do with real estate, you just never know what's going to happen. But while they're kicking out these dividends, I'll take it. Main Street Capital. Notice again, another capital company, but this time it's a little bit more. $30.31, and Main's is M as in Mary, A-I-N as in Nancy. And notice it's a monthly dividend, and it's 20 cents, 20.5 cents. And at this price, it's 8% on your money. And that's $2.46 per year, ladies and gentlemen. So 8% on your money. Again, money that's already been paid out, already earned, and we're getting checks. Although I reinvest it, so the percentage actually goes up, by the way. If you reinvest it, the percentage, your yield could go higher, especially when there's situations where it drops down. Because if the price drops, your dividend yield goes higher. Just so you know. Arbor Realty Trust, A-B as in boy, R. 12% on your money for a $10.19 stock, 31 cents every quarter. I believe anybody can do this. Even it doesn't matter your age. The only thing we need is a stable environment, and this is why if you're a top 10%er, you need the economy to be stable, because when you're buying at these type of prices, you're hoping that we don't have any conflict anywhere, so the price can rise just a little bit, and you know every 3 months or every month, you're getting a dividend check. That's what you want. All right. Remember, I talked about gold and silver. I'm just using this as an example because AUY, Yamana Gold, is $6.51. This is a miner stock. They own gold mines, and it gives out only 1% a dividend every 3 months, which is only 7 cents per share. But this has risen 65-70% just this year because the gold prices have went up. Therefore, when you're mining the gold, now you charge more. So therefore, you have an appreciation. I didn't have to buy gold at 18 or 19. Well, actually, it'll cost me $2,000 per ounce. I could spend hundreds of dollars buying this, and I'm getting only 1% on my money, but I'm enjoying the rise of the gold price as well. So the appreciation. In fact, let me see what actually has happened instead of just guessing. Let's go find out, because I can't remember, because I just don't hold these things just by themselves. Here's the 1-year chart, so we can see here. And with this, I don't think I'm going to be able to get my percentage down because it says 120%, ladies and gentlemen, in 1 year. That's the price difference. 1 year ago, it was only $3.17. So you done doubled your money, 120%. Let's go 6 months, 60% on your money. And we can't do the 3 months when it dropped down here to $2.97, $3.28 again. And it's just been rising ever since because the gold prices have been rising. So that's a recap. I just wanted to let you have an idea of why you should be in the stock market at all times. When this thing possibly goes down, we know what to do then. See what happens. See the video that says what happens when the stock market goes down. Then we'll use ETFs. All right? That when the stock market goes down, they go up. It's reverse. And then we'll still have our gold, silver, miners, ETFs, and even a little physical gold, a little physical silver that you actually have, because inflation should be kicking in as well. So the price will continue to rise just ever so slightly every month until there's some stabilization somewhere, which who knows when that'll be. So anyhow, ladies and gentlemen, hopefully you like that. And if you have any questions, you can always make comments down below, or you can send me an email at eric@stopstrugglingnow.com. And thank you for watching. And please like, subscribe, and click the bell below so you get the latest updates. And I know it's hard out here. That's why I'm showing you some shares of stock that anybody can get from the price of a Big Mac combo meal. And now you start thinking in your head, wait, I'm getting Big Mac combo meals, I'm getting Starbucks coffees, I'm getting all this food at stores and things like that, snacks. Each time I could actually really have like $1.50, $2 per burger coming into me every year for the next 10, 15, 20 years. When you think about it like that, now you're starting to think, wait a minute, every time I take a bite into that sandwich, $2. Next time you go to the store again and do your fast food runs or pizza runs or anything else, you're sitting there, or beer runs, you're sitting there like, wait a minute, I could have bought like 3 of the, wait, that's $6 per year I just gave up. Starts adding up, because now when you start going over the course of a month and you're going, wait a minute, I spent this money, this is $100 a year I gave up for the next 10 years. It adds up pretty fast if you pay attention. So there's more than one way to be financially independent. There's more than one way to create wealth. But this right here has been a standard for like 80, 90, 100 years. All right, ladies and gentlemen, that's it. So be safe out there, and keep your head up, keep moving, and I'm out.